Good morning, everyone. Hello, hello. It is Wednesday, May 29th. We have um, already cut the week in half, right? We've got a shorter week, as I mentioned, starting yesterday, and some news surrounding oil and NVIDIA. So, markets right now, they're pulling down a decent bit here pre market. We had a nice, interesting little pop yesterday into the close that got sold off on the whole overnight session as is currently selling off right now. So before we get this started, remember yesterday what I was mentioning is that TPA is back with the monthly subscription for everything, right? All the courses, futures course before was an individual product. We're bundling it all together right now. So this is a part of our Memorial Day kind of sale for the foreseeable future. But you guys can check that out with everything included: options course, futures course, site course, all the courses, everything, as well as the room. So you can check that out. We also have that free Discord available to you guys at community.tradeproacademy.com, where I'll be posting a trade plan today. So let's dive into some of this news and some of this momentum and this movement. What we have is oil, some decent upside over the last few days here, and a consolidation wave in the oil and gas sector is not letting up right now. So ConocoPhillips agreeing to acquire Marathon Oil at a 22.5 billion all stock deal, and the latter was already climbing on reports overnight, but the deal's confirmation sent MRO shares up about 6% pre-market. The footprint of ConocoPhillips will expand tremendously following the acquisition with assets in Eagle Ford and back in formation, and as far as Equatorial Guinea as well. So the U.S. is currently producing over 13 million barrels of crude oil on a day-to-day basis, which is way more than any country on the globe, which includes also Saudi Arabia. The output growth has helped tame gas prices and, perhaps more importantly, undermined the influence of OPEC and Russia following the invasion of Ukraine in 2022. So this has clashed with the Biden administration's clean energy agenda naturally, though for the time being, inflation concerns and energy independence seem to be the top priorities, especially if they can be paired with climate spending towards green transition. So producers also know that while times are good, demand can come down or eventually plateau, especially with the U.S. currently exporting more oil than nearly every member of OPEC. And one doesn't have to look super far to see that 2014 to 2016 downturn. I still think that we've kind of plateaued in a bottoming formation on oil for the next few, or very close to a bottom for the next few months. I've been liking oil this past year, and this pullback I think is another opportunity to swing some of those longs into year end and further out even. So in 2014, 2016, we saw that oil was hammered down realistically, and the industry was largely driven by a supply glut. Boom and bust cycles are naturally normal for the oil sector, but many are preparing in advance this time around, turning to mergers and consolidation to squeeze more profits from their production and raise their competitiveness as the cheapest barrel on the market. So deal makers in recent months have seen that Hess shareholders approved a $53 billion sale to Chevron, as well as Exxon's all-stock transaction of Pioneer Natural Resources valued at about $60 billion. So it didn't stop there, right? We saw energy-hungry companies look to snap up important resources despite increased threats of antitrust scrutiny, and Endeavor Energy Partners confirmed a $26 billion offer from Diamondback Energy, right, ticker symbol FANG. Occidental Petroleum also announced a $12 billion agreement to buy West Texas producer Crown Rock, and other deals are continuously flowing. So we've seen a lot of consolidation here. Oil into this 77 region, 76 region is kind of bottoming out right now. We'll see if we can actually make this move above a very important level into this like 80-50 to continue some of this upside trajectory. Now, let's talk about these markets, right? Because we've seen a recent, I guess, active sell on equity assets for the last few days, right? Well, maybe not like a few days, but even last week we've seen some spurts of pretty hardcore selling, and a lot of this, right, is being, I guess, subdued, if you will. It's not allowing for a more concrete drop. A lot of people saying a lot of this is due because of NVIDIA holding up very, very well after it announced earnings. So they rallied another 7% yesterday, taking the AI darlings market value to $8.1 trillion, which is, believe this or not, it's larger than the entire Canadian stock market's market cap combined. So it's only about $100 billion away from surpassing Apple, the second most valuable company in terms of market cap. And the stock also topped Interactive Broker's weekly list of most active symbols and helped push tech heavy NVIDIA, the NASDAQ composite, past 17,000 for the first time. NASDAQ, the futures didn't find a new high yesterday, but they did rally, and they rallied into the close, but they were holding on for dear life before we saw a larger sell into the afternoon. So NVIDIA shares have more than doubled in value this year, notching 4 months of gains as investors continue to bet on the company's prospects after its stellar earnings. In contrast, a lot of the other tech names, right, you take a look at Apple, for example. Apple yesterday gapped up a decent bit, but only to get pulled back down. It's trying to climb right now. We can take a look at what Meta did as well. Meta held its ground okay yesterday, but it's gapping down right now. Google is, again, yesterday held fairly well, gapping down. Amazon is gapping down as well. So a lot of these big tech names, right, they're still sustaining fairly well, which is kind of holding this market back from seeing more aggressive downside, if you will, right? These big market cap heavyweights, right, specifically in NASDAQ, and there's a lot in the S&P 500 as well, are really sustaining the market weakness, if you will. Because if you take a look at breadth, for example, right, the underlying factors of what was going on, right, the breadth, especially into yesterday's close, has been dropping off on the S&P and the NASDAQ fairly aggressively without being able to notch up into overextended territories to the upside. So there's a lot of names, right? You take a look at the equally weighted average, for example, had a pretty tough day yesterday. The majority of names are seeing some weakness while big tech is just holding things up. Now, one of the other interesting things to watch, right, is the Dow Jones Industrial Average. This has been a leader for quite some time in terms of most recent movement, and the fact that we're seeing larger pull downs in this is kind of showing some signs of worry, right, some might say. So we'll see how this session wraps up. If the Dow Jones can actually close below its 50-day moving average, we could be in a position where we do see a little more downside as these equity markets are now will gap lower realistically come into this open. So if we take a look at the S&P 500 futures here, one of the things on last week's drop that I was eager to see was 5260. Right, the top band of this distribution area that kind of holds out a heavy volume block, but we didn't trade it, we traded slightly above it before we propelled a new rally. So right now prices are slinking lower. We've been moving through distribution areas to the downside, and realistically we're under that 5300 area, which makes it a little tougher for the buy side to come in. I'll be looking to see if any buyers come in at 5270 and then down at that 5260. Those are going to be two areas where I'd expect buy side to come in, but as things are holding out right now, it's a little tougher to be on the long side if we're holding this aggressively under 5300. Yesterday some fairly interesting activity came in at market, creating very heavy positive deltas. Large trade orders coming in at the ask on the S&P, clustering about 16,000 contracts imbalanced to the positive delta side at the ask. And once we toppled back under those areas, right, that opened up the floodgates. There's still some suppression of the downside due to very big tech, specifically NVIDIA. It's a very large constituent. And if we're going to see some of that downside, realistically, the S&P, the futures have to close under 5260. Otherwise, I'm going to be very wary about the buy side today until we get some moves potentially above that 5300 that kind of nail it down. So with that being said, we'll do a further deep analysis into this and the markets that we're going to be trading today in our trading room, which we're going to be opening right now. You guys can jump into that and also watch our futures course along with it. And otherwise, we'll see you guys tomorrow. We'll see you in the free Discord. Check out community.tradeproacademy.com. And let's wrap this up. Let's have a good mid-week day. Still taking it a bit slow. Volumes notching up, which is good for us because it's anticipated movement in these markets, and that's what we want to see. So I'll see you guys tomorrow, and we'll